Hi, I'm Nussbaumer from Macrobeat.co.uk. We had a bit of a wild week in terms of content, but not such a wild week in terms of volatility in some of the asset classes. There's a few things I want to look at today, which is obviously the FOMC meeting, which we're going to have a quick look at, the repo market story that is doing the rounds this week, and last but not least, obviously the impact on oil from the attack supposed to be from Iran on the Saudi crude facilities. In terms of the FOMC, the meeting result at first did look rather hawkish, given the dot plot didn't really indicate any more cuts during 2019 and only really seen one more cut in 2020. So the equity market started to collapse, the dollar started to rally heavy, and yields started to go up, the dollar yields. Later in the press conference from Jay Powell, he did underline some of the positive outlook from the US economy, but then he spent really the rest of the press conference talking about all the downside risks to from trade, the downside risk from the global growth story, and then he really mentioned the key word, which was really to do with the balance sheet expansion. And when I did hear that sort of word, I go like, okay, this is turning everything more on a dovish twist. And we're going to look at the sort of market reaction in the equity markets in a moment. The repo story, I want to show you the first slide where we see the overnight repo rate for just a general collateral. This is something that is very worrying to me. I'm by no means an expert in this field of interest rates or repo or whatever, but I'm an expert to see things when something is not adding up or when it should be a worry. This rate to shoot up, and we had the other overnight repo rate shooting up to 10% at some point before the Federal Reserve started to inject liquidity. These sort of curves you would see in emerging markets. Yes, there's all these reasons about oversupply or tax payments from corporates, but let's be honest, we know a year in advance when this is going to be, and that's just not an excuse. As I said, I have no solution to this. This is just something I'm going to be watching, because it worries me if the largest market on the planet starts to have such reactions that are really more a reminder of an emerging market rather than a solid developed market. On the next slide, what I indicated in my intro is what we see here. The red area is when the actual release was at 7 o'clock, where we got the announcement of the Fed, and we see the rather strong reaction on the downside in the equity market. The green area, you see the moment a word of balance sheet expansion was mentioned, which is more or less QE4 in some form or shape. We had a very strong reaction on the equity market, a big bounce back. The Dow futures rallied from down 200 into the positive territory. We had gold turning around and started to rally again. And the reality is really only the FX market didn't really get it at the beginning, what that actually means. On the next slide, we have the dollar index. There we see we're just making zero progress. And even that's somewhat, if you want to argue, more hawkish Fed meeting versus expectations, didn't really change that picture. And to me, I know I've been going on for a while, but to me, the dollar just shows signs of a bigger top that's going to be in place. When are we rolling over? I don't know yet. Once we break below 98, the figure in the DXY would be the signal that maybe finally we start to roll over. And this is really what I'm focusing on in the last quarter and going into 2020. I expect a major top in the dollar. On the next slide, we have the euro. If you think about, we see that big sharp move down to 109.25 on the back of ECB's QE2. And now we just sort of hang up here, which is very surprising given that the ECB seems to have been more proactive in terms of policy, but the dollar just seems not to want to go up anymore. So I think even the euro could start to go up despite very weak European rates. The last slide we have is oil. Obviously the big jump, 15% gap on the attack on the oil facilities in Saudi Arabia. And I still think that is one to watch. There's still geopolitical worries around that situation on retaliation from the Saudis. This is it from me. Have a lovely week and a lovely weekend. Thank you.